Hello accounts people, time to have a look at some more complicated VAT calculations. If you're an AAT student, you should be focusing on learning why, not just a mechanistic way of completing a VAT return. If you've got something unusual in the exam, you'll be able to cope with it, and also from a point of learning for the real world throws up all sorts of strange things every now and again. We've got a VAT return for Beastly VAT Ltd, that is a made up name by the way, and the return is for the quarter ending the 30th of June 2016. That's only really going to matter from the point of the VAT bad debts, the VAT claiming back on bad debts. So having a quick look at what we've got down the left hand side here, we've got a sales day book, we have got a purchases day book, we've got some sales returns, a fuel scale charge, 2 bad debts. We've also got a couple of odd little other purchases. We've got a salesman's car and a delivery van. Should instantly remember that one from ACPR. And then we've got a petty cash book. There's a little bit of a meal receipt. Well, yes, we're going to worry about that when we get to it. And then there'll be an error to go in as well. So straight off into the workings out, I'm going to go item by item rather than box by box, just as an alternative way of doing things. We're going to start off with then our sales day book. Well, all we've got really is the £2,000 VAT on our sales, and that's just going to go a straightforward entry in box number 1. However, in box number 6, we still need to put in the £1,000 of zero rated sales, as well as the £10,000 standard rated, because they're zero rated sales, not of course exempt. Exempt wouldn't need to go in here. On our purchases then, so of the 4 items we've got here, I'm just naturally going to get rid of the EU acquisition first, possibly because it just goes in box 2. £3,000. Now notice it's inclusive of VAT, including VAT. So that's £2,500 plus £500 VAT. So the £500 VAT goes in there, but I'm going to claim it back as well. So it's in box 4. One of the things that you just have to get used to. Despite the fact that box 2 is really about outputs, it doesn't go in box 6 in the outputs section. All we need to do is to put the 2,500 as a figure, part of the figures in our control box number 7. So that's the EU acquisition dealt with, apart from remembering box 9. But you wouldn't have forgot that one, would you? So let's go through these individually. Zero rated, well, there's no VAT to go in box 4, so there's nothing. But the 500 still belongs in box 7, even though we're not claiming the VAT back on it, because there is no VAT to claim back on it. And then standard rated, 4,800 including VAT, that's £4,000 plus 20% plus £800 VAT. So in our box 4, there's the £800 we're going to claim back. And in box 7 we need to put the £4,000 net into our control figures. Then we've got a reduced rate of VAT. So various ways of doing this. That £367.50 is 105% of the net. Various ways of doing it. Divided by 21 gives you the VAT. Dividing by 1.05 and times 100 gets you the net, or you could divide by 105 times 100, whichever way it works out. I'm just going to do equals 367 divided by 21, £17.50 VAT, or I could have done divided by 105 times 100. That will give me the net. Convenient, obviously, because that added to that gives me my £367.50. So the £17.50 VAT on it is to be claimed back. Input VAT. So that's going to go in my box 4, and as an input I've got the 350 to be claimed back. So that's all my purchases dealt with. Now for my sales returns, so plenty of room for errors here. Zero rated, so it's 120 plus nothing. 240, noting that it's inclusive, 200 plus VAT, and 105 to save any more complicated maths is 100 plus £5 VAT. So their sales returns, they just need to come off, or the VAT needs to come off box 1. Minus the £40 VAT on the standard, minus the 5 on the reduced. And in our box 6 we can take off the net. If you made this error, I don't think HMRC would be really bothered about it, but in an exam, do it properly. So the 120 is coming off for the 0 rated, the 200 for the standard rated, and the 100 for the reduced rate, the net coming off to the nearest pound, of course. Now let's have a look at our fuel scale charge. So most importantly, because this is what it's all about, is the fact that you have an extra charge of the VAT. This is a VAT return, not a personal tax return where the £300 would go in. But the £50, that's a liability. We owe that to HMRC. It's a current liability. So the 250 net will go into box 6. Next on the list is our 2 irrecoverable debts. On an AAT exam, if you see 2, the probability is that one of them can't be claimed back for some reason or other. The rules, obviously, you have to write it off formally in your accounts, and they have to be 6 months overdue, not 6 months old. These are both 6 months old. Let's have a look. 30 days from the 20th of December would have been the 19th of January, so this wouldn't have been due and 6 months overdue until the 19th of July. That's no good. We're not going to be able to claim that £80 back yet. That will go in the next VAT return. This one, though, however, the 20th of December would have been due on the 27th, and therefore due on the 27th of the 6th. That one's okay. We're going to claim that £80 back. Purely an entry into box 4. It doesn't go into box 7. Yes, it is an input, but because it has to be at least 6 months old, it is probably not only an old VAT year, because although we have quarters, you know, we do actually have VAT years, but it's also probably a previous financial period for our business. And really that doesn't really relate to our inputs for the current time period. In all probability it's a year or 2 old, and not just 6 months and 7 days old when we're going to claim it back. So our extra 2 items then, a salesman's car then, as hopefully you know, we can't claim the VAT back directly on the salesman's car. There are schemes to claim it back. You can claim it by usage as and when you actually use the car. It also means that when you sell it, you don't have to charge VAT. But that's, of course, going to be in a few years' time. So there's no VAT to claim back, nothing in box 4. And that means that we treat the 18,000 as the item going into box 7. So even though we're not going to claim the VAT back on it at the moment, we need to put it in there. It is an input of sorts. And we're going to claim back the VAT back a different way. A new delivery van, though, we can claim that VAT back directly. So we're going to add into box 4 the 4,400 VAT on it, and then into our box 7 the net 22,000, whereas of course the car, it was the gross. So that will go into our box 7 when we get round to it. So down to the bottom item then, or bottom 1 item, apart from the error being the last one. We've got our petty cash bill. A little bit of note though, meal receipt for entertaining our main customer. Might be our main customer, but Joe 89 is from Essex. Essex is part of United Kingdom. We therefore can't claim the VAT back. If he put it in as a VAT claim, as an expense claim, that's okay. He can claim the £2.99 VAT back, but we can't. So what we're going to do with this one, well, 350 is still 350. However, we've got to take off that. We've got to be honest and reduce the VAT claimed back to £47 and a penny. That means that doesn't add up anymore. Add that. It's effectively become zero rated. £302.99 now as the net. So now box 4 then, what we're going to do is claim back what we are allowed to claim back. The £47 and a penny. And in our box 7 then, we're going to put the 302.99. The new recalculated net. And then there's an error of £52,000. Well, that's far too big to be corrected on a VAT return. The limit is 50,000, and that's only for very, very big companies in millions of pounds turnover. Between 10,000 and 50,000, it's going to be less than 1% of your turnover to be corrected on a VAT return. Less than £10,000, we could have corrected it, but it isn't. It's bigger than that. So we can't do anything with that. We've just got to leave it. There's nothing going to go into box 8, so we've got down to the bottom of our list and there's nothing there. So now we can complete our numbers and actually put the totals in. 2,000 minus 40 minus 5 plus 50. £2,005. That is just straightforward. Add those up. So box 3 is box 1 plus box 2, £2,505. So box 4 then, plenty of room for error here. 500 plus 800 plus our 17.50 on the reduced rate plus the £80 bad debt plus 4,400 on the van and our petty cash book. £5,844.51, which is bigger than box 3, which is why when we do 2505, of course a real VAT return would do this for you. We're going to get a negative figure, which means we're actually going to claim £3,339.51 VAT back. So one of the reasons for doing so is, as per this case, a large item of capital expenditure for one particular quarter when we normally pay VAT. Other reasons, we sell in the UK, we sell children's clothing, basic food stuff, in other words items without VAT on, or rather with zero rated items. Also, if a large part of what we sold was exported to the European Union, to EC or EU, those of course would be treated as zero rated, and then we'd be permanently claiming VAT back every single quarter. So just to finish off our control boxes then, so these are all done to the nearest pound. Down is acceptable. It's a control figure, not a well, I mean it should be a precise figure, but it won't matter if you round up or round down on these. So HMRC, if you ask several VAT people, they'll give you several different answers. This one then, £1,000 plus our 10,000 minus our 120 minus the 200 minus the 100 from our returns day books plus our 250, so 10,830. Because it is a control figure, if all we sold all the time was 20% VAT, had we missed off the sales returns, it would look a bit peculiar, it would look rather strange. Box 7 then, this is going to get rounded to the nearest pound. Rounded down would also be okay, I'm told. 2,500 plus the 500 plus the 4,000 from our purchases plus the 50, and then the two vehicles, and lastly our petty cash book. 47653, I'm sure 47652 is okay as well. 0 in there, and 2,500 completes our VAT return for the quarter ending 30th of June.